Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although it isn't surprising that Bitcoin has been struggling over the past few weeks with the aggressive drop we've seen in global liquidity, the good news is that markets and our global economy rely heavily on increasing global liquidity, so it's only a matter of time before this downtrend reverses. For weeks, we've been talking about the negative implications of the dollar index breaking higher into our risk-off region and what that would mean for global liquidity and Bitcoin. And this dollar index strength has been a result of the market pricing in less and less Fed rate cuts for 2025. As of right now, the market is only pricing in one 25 basis point rate cut over the next 12 months. And this is why I called Monday's free weekly report the moment of truth. We had Bitcoin bouncing, which is what is expected after an aggressive sell-off. But the real question was whether we would just have a lower high at 102,000 or if it was the beginning of a new rally. But because global liquidity was still falling aggressively, my base case was that Bitcoin would just put in a lower high before visiting some lower prices. And as of right now, that's what we've seen so far. Of course, as always, we'll have to wait for the weekly close for confirmation. But as of right now, this is an ugly wick to the upside above 100K. And it looks like Bitcoin is going to close back into our previous range, which is a clear sign of weakness in the short term. Now, the good news is that these are only short-term concerns, and I believe the market is under-expecting how many Fed rate cuts we're going to be getting in 2025. I don't think the economy can handle getting only one 25 basis point rate cut, which means that it's likely that Bitcoin's monetary debasement hedge trade is still alive and well, and we end up seeing more Fed easing than expected in Q1 of this year, because we know that central banks love to issue more debt, and eventually that debt has to get monetized and increases the money supply. And that's a trend that we've seen over the past 60 to 70 years. So we'll keep an eye on these Fed rate cut expectations, especially after the upcoming catalyst we have, which is the unemployment rate print coming up this Friday, which is going to tell us the health of the labor market, and it tends to have quite a strong impact on these Fed rate cut expectations and the DXY and global liquidity as a result. And we also have an important CPI print coming up next week, which tends to have a large impact on these Fed rate cut expectations as well. As for my portfolio, I did take some more small profits across my positions, and I wrote about that in detail in Monday's free weekly report. I just could not ignore the fact that Bitcoin was bouncing above 100K while global liquidity was still falling aggressively, and I'm still expecting lower prices in the short term based on this falling global liquidity, so I could not pass up that opportunity to lock in some more profits above 100K, especially with the bearish price structure we've seen recently and the bearish engulfing candle we had a couple of weeks ago. As for performance, we're still seeing Solana and Ethereum struggle recently in comparison to Bitcoin. I do expect this to change if we do see that move higher into a Q1 cycle top, but as of right now, they are seeing more downside than Bitcoin is. I'm still optimistic that Ethereum is just reaccumulating before it finally breaks higher following Bitcoin, and we have a lot of strong narratives for Ethereum as of right now. We still have an upcoming upgrade, we have an incoming pro-crypto US president, and I do think we will see some staking ETFs in 2025, which should result in Ethereum seeing more ETF inflows than it's seeing right now. As for Solana, pretty ugly weekly candle as of right now, but we still have time to save it before Sunday. I don't want to see it close below $200 again, but we're going to have to wait for the weekly close to see how that plays out. But I'm still optimistic on Solana with the amount of usage it's seeing, beating out both Ethereum and Ethereum's most popular layer 2 base in DEX volume, and this is clearly the most used chain after Bitcoin and Ethereum, so I'm still optimistic for what it has in store for 2025. As for what I believe comes next for Bitcoin, my base case is still a deeper pullback into the mid 80,000s to high 70,000s because of the continuous downtrend in global liquidity that we've covered in this video, and because of that bearish deviation we had above our range high in December that aggressively brought us back into the range with a bearish engulfing candle. All I'm waiting for now is a close above 91,000 to confirm the breakdown, and that is definitely my base case as of right now. And corrections and sentiment resets are quite healthy in bull markets, and I don't believe the cycle is over quite yet. I still think we rally higher into late Q1 or early Q2 of this year once we shake out some of the weaker holders with that deeper correction. And I'm still optimistic because a lot of our narratives are still in full swing. We're still seeing plenty of these nation state strategic reserve adoption narratives. Just this week, we had the Czech National Bank governor weigh Bitcoin for a future reserve strategy. And again, even if these things don't get implemented, the fact that these central banks and governments are even discussing it is quite bullish for Bitcoin in the medium term, in my opinion. We also still have the corporate treasury strategy in full swing. We're still seeing the US-based Bitcoin miners hodling their Bitcoin and even using debt to buy more of it. We're still seeing MicroStrategy buying Bitcoin. And as we expected, we are seeing the size of these purchases begin to shrink because of how aggressively Michael Saylor bought in November of last year and took advantage of that volatility we saw in MicroStrategy during that blow off top move to about $500 or just above it. And this is very similar to what we saw in 2021, where MicroStrategy saw a blow off top move and Michael Saylor took advantage of it and raised a bunch of debt to buy Bitcoin. He then used that money to buy Bitcoin aggressively near those elevated prices, just like what we saw recently. But now I believe it's going to get harder and harder for him to raise those huge amounts as volatility in MicroStrategy decreases and it starts to chop around and work its way down after that major blow off top move. But I'm glad he's still buying whatever he can in the short term, even if he can't buy those huge amounts he bought towards the end of last year. And finally, our ETF narrative is still in full swing. We've seen a great start to these Bitcoin spot ETFs here in 2025 with back-to-back days of nearly $1 billion of net spot ETF inflows. And as long as we continue to see those inflows, I think investors are going to remain calm and be comfortable holding their Bitcoin for higher prices. As for traditional markets, we've seen a red week for the S&P 500 so far, so it's not surprising that it's been taking Bitcoin down with it. And these are the least concerning Bitcoin corrections for me because they're clearly driven by liquidity and the weakness we've seen in traditional markets. They've been following each other quite closely ever since that December FOMC meeting. And I do expect global liquidity to start picking up again quite soon because of these huge federal deficits coming from the US government, just like we've seen over the past few years and just like we've seen over the past few decades. We know that central banks love to issue more debt to solve their problems, and eventually that debt has to get monetized, which results in currency debasement and an increase in the money supply, which is bullish for our risk assets like the S&P 500 and definitely bullish for our fixed supply risk assets like Bitcoin in the longer term. So there's definitely going to be volatility along the way, especially as global liquidity continues to decrease. But as I said in the beginning of the video, markets and our global economy rely heavily on increasing global liquidity, so it's only a matter of time before central banks step in and start debasing the currency to increase it in the medium term. So all we have to do is remain calm and patient and not get shaken out by the volatility in the meantime. But anyway, let me know what you expect. Will global liquidity keep going down and take Bitcoin down with it, or will it reverse sometime soon? I still think we have some volatility ahead and some downside for Bitcoin before we have our blow off top move higher, but we'll have to continue monitoring the data and see what happens. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.